How's it going, folks? Today I had the privilege of having a conversation with one of my absolute favorite people, my lender, Robert Milliken with Willow Mortgage, the Robert Milliken team. And we actually talked about the six top current myths of the mortgage industry, refinancing industry, that kind of stuff. I'm actually going to clip these up into six different parts. We're actually going to go for the last because I think it's the most relevant to today's world. It's actually how people that may be in forbearance that have chosen to take advantage of that, how might that affect them now and in the future for refinancing, taking advantage of these low interest rates, and as well as mortgages down the road, that kind of thing. So I thought it was really relevant. So that was, I'm going to skip to number 6, and I'll get all these posted for you over the next couple of weeks. I hope you enjoy. If you have any questions that we didn't answer in these top myths, please put it down below and we'll get it to it. Have a great day. Okay, now for number 6, the question number 6, and this is a more difficult one. The forbearance stuff that's going on right now in 2020, forbearance, how is it going to impact us for future mortgage buying, refinancing? If I've got my mortgage into forbearance right now, what am I going to have to do, or what do we know as of right now we're going to have to do to get a new mortgage or refinance that mortgage?
So we haven't been given a ton of great guidance on forbearance, particularly from a credit reporting perspective. That's forbearance up to the individual loan investor, the servicer that you're paying your mortgage to, okay? So when that person is deciding how they want to proceed with forbearance, when forbearance was, I totally understand why that was done. In my opinion, it was the right thing to do. They knew that there were going to be a flood of people that were going to come into the unemployment picture. Obviously, without an income, a lot of those people wouldn't be able to pay mortgages if, maybe a 2-household income. It would really affect people's ability to pay their mortgage through no fault of their own, and really no fault of the business, right? A situation that none of us have really gone through, most of us haven't gone through. Mm-hmm. So I guess
definitely
what
not
they
in our
did was
lifetime.
they said, you don't have to, you don't have to prove hardship. You don't have to show me that you've lost your job, right? And so as you can imagine, there have been a lot who didn't lose their job, were fully capable of making their mortgage payment, yet still went into forbearance. Mm-hmm. So it's changing from each investor. They're all a little different. What are they offering? Is it 90 days? Some people are 90 days and the end of 90 days worth. Some people are putting it off the end of the mortgage. There's been some talk that some people would forgive it. We've heard all different kinds. The one thing we have no guidance on is how it's going to affect credit. I've actually seen credit reports where someone went into forbearance fully thinking that they were following, an agreed upon. There it is. It shows up on their credit report as loan in forbearance, right? So what I can tell you is that Fannie Mae and Freddie Mac loans in forbearance. So if you do decide to either go buy another house, to refinance your current house, you've got to pull that house out of forbearance, loan out of forbearance, okay? And that will then be specific to agreement with your servicer, which again isn't the same, it's not uniform. So the first thing I'd say is if you can make your payment, make your payment. We certainly don't want anybody to put themselves in a negative position, but if you're able to make it, if you truly need forbearance, then, first of all, God bless you, and we hate to hear that. This is the program, this is for you. It's not for people that can make it, that just don't want to. So be very, very careful. Try to ask as many questions as you can. Certainly get with Robert or myself, and we can kind of look at your situation, because again, it's going to be specific to your loan servicer, right? If you want to pull a call, then let's do that. We'll get on the call with your loan servicer and you and talk through it. How is it going to report? Explain to me what things are on our end to come out of forbearance. All those little questions because it was easy to do, and it sounds like it has been very easy to put into place and to get into action. The consequences of it have not been given a whole lot of clarity.
Well, fully realized, right? I mean, in a world of business where without specific rules, we make it up, right? Which is what you're talking about with different services, right? In a world without specific guidance, businesses make stuff up, and usually in what benefits them. And I think the second part of that is important is, and again, whether you've bought and sold several homes, I think a lot of people don't realize that not all lenders, even though they may be restrained by a lot of very similar rules, where they get their money in the business, we call them overlays, right? Where they get their money, whether it's an individual investor or a certain bank or whatever, all have these added on restrictions to these particular things. And lenders, as a majority, may decide in the next 3 months without guidance that they don't want to refinance loans that are in forbearance, right? Or whatever. Or they may decide the opposite, that they're completely fine with it because some new guidance comes out. And it may be a moving target for the next 6 to 12 months until they do get all these guidance and that kind of thing. I mean, there was just something last week that they came out with Freddie Mac and Fannie Mae came out with new guidance on self-employed workers for just during this time period, and a better guideline on how to accept they're, going through this kind of thing if you're self-employed and that kind of stuff. So that is definitely a moving target. So it's always a good conversation. Again, on any of these, you got to pick up the phone, you got to call and see what works for your particular situation. And that's really the goal we're trying to accomplish here, right? Is we got to get you on the phone. We got to get you to ask your questions. We got to see how it applies to right now and see what we can do for you.
Absolutely. We've seen some changes, obviously, with the virus and how that's interpreted or made its way into, under Fannie Mae and Freddie Mac, or whether it's FHA or whatever loan programs, they set the guidelines, the base guidelines for everyone. You can be in Montana or you can be in Texas, and you're following Fannie Mae, you're following FHA, whatever that may be. Yes, loans are sold to investors by and large, right? And those investors then actually sell the rights to the people you make your payment to. And so when those servicers go into that agreement, they're guaranteeing the payment every month to that investor. Whether you make it or not, they have to. So overlays, there can be, it varies. Some lenders have more overlays. We tend to have less, but some lenders have more than others. They're not all the same. It's just their personal, business plan and how comfortable they are with moving forward with A or B, right? But yes, I mean, you're right. There's a lot that's going into it. Self-employment, we've seen, obviously, it's a little bit harder to feel maybe as comfortable, or at least from an investor perspective, that meant for someone that maybe is like Robert or I, right, as opposed to someone that may work at Dell, right? It's a person doesn't have a fluctuation, or they have a consistent salary. The thing right now, because of the virus, right, it's a little bit different right now, because for the longest time, and you think, right, for him, we were able to get him done, but his practice absolutely retracted, right? I mean, he was bringing in less patients because he was only able to do essential things. So surgeries, or if someone was in an accident, things like that, he could still work on that. But someone wanted a cleaning, no, you just had to have dirty teeth for him. So, understand that's going on right now. Unfortunately, a lot of people have lost their jobs. A lot of people have had businesses that have lost revenue. So underwriting and even Fannie Mae has adjusted accordingly. So again, like you said, have that conversation, get that out in the open, and talk about it, so that you know, when you're ready to do whatever it is, you're forward.